Hello my fellow investors and welcome back to another video. Today guys, Broadcom had earnings and like I promised, we're going to take a look at these earnings because I want to see if we want to change the assumptions or not, right? We already took a look at the fundamentals of Broadcom a few days ago and now I want to see if maybe after the earnings, maybe we bump them up, maybe we lower them, etc, etc, etc. So before we get started, make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. The goal for YouTube, guys, it is, of course, 3,000 subs. We finally crossed over the 2853. And, well, Rumble, you guys already crushed it. So y'all are just killing it right now. Absolutely love it. Absolutely love it. But again, if we don't make it with the YouTube goal, then it's perfectly fine. It's just we're going to have to just roll that over to next year. So, all right, guys, with that said, let's get started with this earnings report analysis video. So here you have it, guys. Now, before we actually move on any further, any and all archived sites that you're going to see here, plus the earnings report, all of the links to every single article that I'm about to read here, guys, I will have it linked in the description below. All of them archived, and the one to the earnings report I will leave. That'll be the first one in the description below, so you guys could read it for yourselves, because again, this is not financial advice, and every investment is the present value of all future cash flow. So we got Broadcom non-GAAP EPS of 11.06, beats by 10 cents, revenue of 9.3 billion, beats by $20 million. Right here, we got revenue of 9.3, up 4.1% year over year. Very interesting. Cash from operations of $4.83 billion for the fourth quarter, less capital expenditures of $105 million, resulted in $4.7 billion of free cash flow, or 51% of the revenue. I love how they're saying, hey guys, this is the payout ratio based off of revenue. Now I'm gonna take a look at this in regards to, of course, the free cash flow, because that's the one I really like to see. We get over here something massive, but we're gonna skip this one over here and we're gonna go to this one. Adjusted EBITDA of $6 billion for the fourth quarter, or 65% of revenue. Non-GAAP EPS of 11.06. GAAP diluted EPS of 8.25 for the fourth quarter. Fiscal 2024 annual revenue guidance of approximately $50 billion, including contributions from VMware, an increase of 40% from the prior year period. Fiscal 2024 annual adjusted EBITDA guidance approximately 60% of projected revenue. So all of that is great. However, we do have this story. Broadcom slips despite strong 2024 guidance Q4 results. Now, if we actually read this, we can see Broadcom shares fell around 3% in extended hours trading on Thursday, even as the semiconductor and software company posted fourth quarter results that top expectations and offered strong guidance for the coming fiscal year. Now, this is very interesting because, well, this isn't the case at the current moment. If you see over here, we can see that Broadcom is, well, it's pretty much recovered from the loss of 3%. In fact, they are essentially flat at this point. So yeah, nothing's really changed there. When this article was made, it was made at around or it was published at 4:26 p.m. So, by the time I'm recording this is almost 8 p.m. So that's not really surprising that we're seeing a massive swing to the upside. And this is actually pretty funny because we have this other article which literally says Broadcom in charts. Growth slows for the semiconductor solution revenue. Okay, so if we take a look at this revenue, we can see that for Q4 of 2023, we get over here $7.33 billion as opposed to Q3 of 2023, which was almost $7 billion. So is that considered slow? I mean, if you compare that to Q1 of 2023, maybe, but as you can see, it is still an uptick even from Q4 of 2022 at $7.1 billion. Now, something major that did happen, and this does affect all the people that are dividend investors, which I am myself included in this, and that is the fact that well, actually, to be fair, this guy tweeted this very, very nicely. Yeah, payday, because Broadcom hikes dividend by a whopping 14.1% to now $5.25 per share. Wow, that is absolutely massive. We're going to have to take a look at this in regards to that free cash flow at this price. I don't know if Seeking Alpha has updated it yet, but this is going to be very, very, that's a massive, if they can afford this, this is going to be a massive, massive bump to all of our dividend portfolios. And it honestly may even bring the company up even higher, because a lot of people may want to get into that, especially since maybe $900, guys, isn't too bad of a deal. You guys saw my other video, and it's somewhat a decent price even at the current share price. With that, let's take a look at their actual earnings. And of course, this will be linked in the description below. Now, I'm not going to go over the highlights. We already saw that. Let's take a look at what the CEO actually had to say. Broadcom's fiscal year 2023 revenue grew 8% year over year to a record of $35.8 billion, driven by investments and accelerated in networks connectivity for AI, of course, by hyperscalers, said Hock Tan, president and CEO. The acquisition of VMware is transformational. In the fiscal year 2024, we expect semiconductors to sustain its mid to high single-digit revenue growth rate, with the contribution of VMware driving consolidated revenue to $50 billion and adjusted EBITDA to $30 billion. In fiscal 2023, we achieved the record adjusted EBITDA margin of 65%, generating $17.6 billion in free cash flow, or 49% of revenue. Again, we're going to take a look at this in regards to the free cash flow, demonstrating our stable and diversified business model, said Kirsten Spears, CFO. With this transformational acquisitions and expected increase in cash flow, we are increasing our quarterly dividend stock by whopping 14%. The target fiscal 2024 annual common stock dividend of $21 per share is a record in the 13th consecutive increase. Wow! And the 13th consecutive increase in annual dividends since we have initiated the dividends in 2021. Absolutely crazy, guys. Absolutely crazy. So here we got some of this, and we got over here cash flow from operations. You know, Q4 2022, $4.6 billion to now $4.83 billion. That is up $245 million. And the free cash flow is up 262 from 4.5 to 4.723. So as you guys can see, it's all looking great. Again, this will be linked in the description below for everybody to read. So now let's jump into the discounted free cash flow to see mainly two things. To see if the payout ratio in regards to the free cash flow with this massive uptick in their dividend of 14%, is it still somewhat sustainable? And also on top of that, guys, remember, we need to see if we may want to adjust any of these assumptions that we made last time. So let's do that right now. All right, everybody. So here we have the calculator. Now, first things first, I did have to change all the fundamentals because, well, their Q4 just ended. So I'm actually going to take their trailing 12 months, as we have here on Seeking Alpha, and use this right over here as the most recent numbers because, well, guys, we just got it. Now, I don't think this is updated yet. However, I'm going to take it as it is, right? I'm basically just removing this 2018 and I'm taking 2019 as the 5-year ago value, and I'm putting this one as the new value. Okay, so just everybody knows as to why the numbers may be a little bit different than that of what you saw in the video when we did cover Broadcom's fundamentals. So that's the first thing. The second thing is that I did update this $18 and whatever it was to $21 because they did update it to now $5.25. Multiply that by 4, that's 21 bucks. Okay, so there you have it. If we take a look at these payout ratios, we got 49.93, so 50%. Oh, wow, that's actually interesting. And then on the 5-year average, we got 64. The 5-year average is a little bit concerning, but man, their general trajectory, it's still looking very, very good, guys. I just updated this. You can see it's still hitting that trend line every single time. So I'm not going to say that this is bad in the slightest. This is actually really great. And again, this isn't even updated yet, I'm fairly certain. So this may actually be even a little bit higher. So if they continue this trend, this is looking absolutely amazing. Now, something I do want to change up a little bit, though, it is this discounted free cash flow because, well, we just saw the fact that they just did 4.1% year over year. And, well, I have my numbers at 10, 15, and 20. Now, granted, this is for the next upcoming year. So on average, they would have to do around 10%. That's, I don't know. That might be a little too much. So I might actually lower this down to around 6%. Then maybe, I know that this was a wide margin, 10, 15, 20, but let's say 6%. Let's narrow this down to maybe like 8% and then go up by another 2 and then let's say 10%. So I'm swinging everything down to the downside. And well, now we got the numbers to be a lot lower, as you guys can see right there. So yeah, that is, that's interesting because we still want this thing to fall down to, well, $615 at the highest assumption, not adjusting for debt, and $577 at the highest assumption, adjusting for debt. So seeing that we just got the Q4 and we're comparing that to Q4, we can actually change these numbers up to make a little bit more sense. So this is my final one when it comes to this. Basically, it needs to fall a lot more for me to actually justify it. However, we were at around the $500 mark a few months ago, so it may fall again, assuming that things actually do get worse. So that pretty much does it, guys, for the earnings report review. And, well, I personally think that right now it's looking a little bit expensive, honestly. So that pretty much does it, guys. Make sure to like, subscribe, comment. Really does help here with the algorithm on YouTube. And, of course, a Rumble. With that said, peace out, and we'll see you all next time.